I was never in it for the money. I just like math. And one day that income stream will be set already because I built it. Dividends, by the way, are one of the ways in which I know that at least the company, if it's been paying dividends for X amount of years, tells me something right off the bat about their cash flow.
Welcome everyone to the first episode of our new interview format, where we're going to have insightful discussions on investing and finance with non-investors of the YouTube world. I'm your host, Rick, and today we have an incredible guest joining us, a great finance and investing YouTuber, an investor, as well as a businessman, head of marketing at Tipranks, and I could go on and on with all the things this guy is involved into. So let me just introduce him to you. Ladies and gentlemen, Ari Gutman.
First and foremost, Rick, thank you so much for having me on. I'm excited, very excited to be here and talk finance, business, and everything there in between. Man.
Thank you for joining us. For those of the audience who don't know him, I will link his channel in the description below, so go check it out. He's very, very insightful. You're going to get a lot of value from his channel. But now, Ari, I want to start right away by giving you the word, because we'd love to know something about your background, about how you studied investing, and which experience you've had in the past and how you came to where you are today.
I love it. First and foremost, it's always great to, be on the other end. Typically, I'm interviewing others. So to be now interviewed, it's always a whirlwind of fun. Nonetheless, when it comes to investing, it really all started for me when I was a young kid. And I'm talking, 7, 8, 9 years old. My uncle, who taught me a whole heck of a lot about the world of investing, was a Fidelity ETF manager. So he managed a couple funds, and in total, he managed about $25 billion. My family would always go on, holidays to Boston, which is where he lived. And, I'd be with my cousins, but I'd always be more interested in what he was up to and what he was doing. And he was always reading the newspaper, and he was always looking at this point in time, right, the tickers in the newspaper and what was going on in the stock market. And I remember that, one of my cousins and I in particular had this interest in the market and what was going on. And he would always tell us really just a piece of key advice to begin to look at this world with a lot of curiosity and a lot of interest at kind of what makes our worlds right go around. So at that point in time, Apple was just really blooming. And my cousin loved Apple. Of course, we had, the iPod and all this was coming out. So that was one of the companies that struck my interest. Now, interestingly enough, being so young, right, I did not invest, but my cousin, who actually took his bar mitzvah money at that point in time and invested it, my uncle will still to this day say that his best investment was his son's bar mitzvah money into Apple, which really made him a whopping amount later on. But, I bring that up as one of my first experiences when it comes to investing, because that's where the interest started. And for me, from the investor standpoint, you really need to be interested in what you're doing. And I think a lot of people like to gamble, and gambling's fun, but investing is really for me about, having the interest and curiosity to become a business owner and have that business owner mindset. And that really for me is really where it started. Now, long story short there, it was really in college I started ETF investing. When I graduated, I want to say I got a little bit more risky, but I'm a dividend investor, so I feel like I can't really say I got that risky. I started watching some other YouTubers, whether it was Jason Fieber or it was Andre Jick, and they just showed the journeys of putting money into the market and into companies, high valued, quality companies. And every quarter they'd get these, or every month, right? And then on a quarterly basis, get these dividend paychecks. And, Apple, which I invested in the ETF at that point in time, I was heavily invested in VTI, the Vanguard's total stock market index. They did pay quarterly dividends. So I had the idea and I was like, why not create this portfolio of dividend stocks? And that really, set me on this mission to become a full-fledged dividend investor. And, in time, right? And it's not overnight success here, overnight millionaire with dividend investing, but over time, right? It's playing it conservative, playing it safe, being able to sleep at night. And really what I like to do is research my companies and pretend I am the CEO, the business owner, and keep my money invested in these companies for the long term, as opposed to, a day trader's mentality of just trying to make that quick buck and hit the lotto, if you will.
Do you want to tell us what kind of investor you are right now and the approach that you're using now? Is it the same that you've always had, or how did it develop over time?
Sure. I can right off the bat say I'm right now a dividend investor. And since I've gotten into dividend investing, I haven't stopped dividend investing. I cannot say enough about dividend investing. And I think that it's important, right, that every investor find his or her own strategy that works for them. Many investors, I feel like, run with a strategy for X amount of time. If they don't get that success by next Tuesday, they try the next one. Sometimes that's what it takes. But as you shared, I started off as an ETF investor because for me, just coming from my background, I come from, parents who got divorced, and I lived with my mom, who I'll share was, more not fiscally irresponsible, but I want to say like fiscally negligent, right? And didn't invest. And then on the other end, my father was actually an executive at Johnson & Johnson. So he's very good with money and investing. And so it was just interesting because I would bounce back between the two of them. Living for a longer period of time with my mother, I had financial fears that really, for me, it was like, I need to make sure my money is safe. Like I cannot lose a dollar, which is great investment advice, right? Buffett always shares there's two rules to investing. Rule number one is don't lose money. And rule number two is follow rule number one. The only issue with that approach, right, if I was just keeping my money in the bank, which for a long period of time I was going to lose money, right, from inflation attacking the dollar. So there is a funny story about, the first time was, again, a little kid, went to the bank with my mom. And, I had actually at this point in time bought myself a safe. And I had, for a little kid, thousands of
Like a real
dollars.
safe.
Yeah, like a legitimate little safe. And
All
it was a Brinks home safe. And that's where I kept my money. And I would work every winter, shoveling driveways. In the summer, I would wax cars and I would pull weeds and do landscaping. And I was always doing something. So very entrepreneurial. I made a lot of money as a little kid. I put all that money in that safe, and that Brinks home safe. And I remember the day where I I went to my mom. I said, I think it's time I open up a bank account. Right? If I wanted to feel like a man, So she took me to the bank. It was TD Bank. And we went to speak to the teller, and she sat us down and opened up this bank account. And I remember the banker looking across the desk, and he goes, okay, you can put your money in just this bank account, okay, and it will pay you 0.01% interest, right, almost nothing there, or you can put your money into a CD, a certificate of deposit, which is going to pay you, I forgot what the rate was at that point in time, but obviously it was better, right, than the other interest rate.
Better.
I said, that sounds great. But let me ask you this. How do I know my money is going to be protected and safe if I leave it with you in the bank? Right. So I was a little kid, maybe 10 years old. And, that experience for me is like, I was always looking to play it safe to ensure I didn't lose. But in playing it so safe, you lose, because you need to start taking risk. So the next risk for me, in due time, was not just in the CD, right? Because I can tell you, I came to speak to my father after that, and he said, why would you put your money into a CD? Now it's locked up for a year. You could have put it into the money market. And I was like, what's the money market? So that curiosity was there. I went out and started to read more, and I was always watching videos, and Warren Buffett was of interest, and Peter Lynch, and my uncle, right? So the next safety step for me was ETFs. And I said, well, the question was, well, how do I know which ETF to pick? There's thousands of ETFs now that are out there. And again, kind of my uncle jumped in there and said, look, it's not my advice. I remember him sharing that. He's a very, very humble guy, but it's the advice of kind of the investment sages who are out there at this point. John Bogle, right, was a big one. And John Bogle's advice to all investors is go for a broad-based index fund that's going to cover the whole market. It's going to give you everything from, large cap, mid cap, small caps to value and growth opportunities. And you can't lose, really. And so I said, well, what ETF does that, right? And that's where I stumbled across VTI. Vanguard's Total Stock Market Index Fund. And that was the first fund of choice for me. I put all my eggs into that safety basket of VTI for quite some time. All throughout college, I was actually dollar cost averaging into it. In high school, I was dollar cost averaging into it until I felt I was ready to then build these building blocks above that foundation. This kind of really, without me knowing it, was the development of my now investment strategy, right? Which is lay a very firm foundation, which a lot of investors call the core and satellites, right? I like to stick
Yeah.
with my verbiage there from when I was a little kid, right? Set your investment foundation down. And if you are able to lay that foundation as perfectly as it can be laid, it's going to be the cornerstone of your portfolio. So whether the market goes up or down or whatever happens, you will be on I'd like to say the winning end of that. And then from there, go ahead and add the building blocks, right, to that foundation. So my next building block, I can tell you right off the bat, was Apple. Apple is a company I believe in. I'll never leave Apple's side. And so it's no wonder then when we're talking individual stocks, it's the largest position in my portfolio. Again, it's looking at, which I'm sure we'll get into, right, into the actual business, the leadership, management teams, how they're managing their debts or what are they investing in themselves, all things to look at. Because if you're not, I feel, interested in your investments, there's really no point to picking individual stocks. You might as well just pick an ETF or an index fund and never look at it again.
True. So you talk about a coral satellite approach. So maybe you can disclose a little bit more about how in your portfolio this core part is composed of. And we'd also like to know a ballpark of your portfolio amount and what positions you have in your portfolio.
Sure. So I'm going to share what everybody probably sees from time to time on YouTube. The portfolio that I kind of share openly and publicly. It hovers right now. It's been hovering between 132,000 to 133,000. But then, of course,
Great.
we're talking 401k, IRAs, and then also I have emergency savings funds. I have actually two of them. So all in, I'm a little over 200,000 across everything. So in terms of that core, there's VTI, which is what I initially started with. And then there's VTSAX, which is the Admiral Shares Fund from really VTI. So it's really one and the same. That is what my foundation is built off of. And then after that foundation is all my individual stocks. And of course, they're all dividend stocks, with Apple being right up there. Now, I will also share that I do invest in about a handful of non-paying dividend stocks that I don't really get to talk about because I am across YouTube known as a dividend investor. But I do have some Tesla, I have Amazon and Google. I don't know, if I had a safety rating, right, system, I'd be a very low beta, right? But I think it's, interesting. A lot of investors, and I get this a lot, right? Like, I'm a young guy. Why would I invest into, dividend stocks right now? Why not go growth? First of all, I do have, again, like I shared stocks, a couple stocks there that don't pay dividends that are strictly just there for growth. But I will share this. It's that ability to sleep at night that I enjoy. A matter of fact, over the last couple of years, right, just investing into dividend stocks, a lot of us would be surprised about how quickly we can amass wealth. Like I always say, it might not be by next Tuesday, but that compounding effect does hit. And you may not want to put your dollar, your hard-earned dollar, into a lot of these companies. Like, I don't know, just throw a name out there, right? Like a Palantir, right off the bat, if you're not ready to kind of, go with the volatility of the market. So in being a dividend investor, or I'll say a more conservative investor, you can build these individual positions into high quality companies and feel safe doing it. When I made my decision to invest into Google, right? Like this was for me a company that doesn't pay dividends, but a company that I can invest into because of the moat that it has around it, right? Whether it's YouTube, what we're all on and using right now, or whether it's Google, which we literally use every day in some way, shape, or form. Maybe it's asking a question, looking for the best restaurant, or whatever it may be. It's like, did you Google it? Like, Google's your verb. Right. So for me, investing into Google and knowing, right, almost no debt and their cash flow flowing in, it was a no-brainer. But that all then goes back to like, okay, how big is the moat of the company that I'm going to invest into that doesn't pay a dividend? And dividends, by the way, are one of the ways in which I know that at least the company, if it's been paying dividends for X amount of years, growing a dividend tells me something right off the bat about their cash flow. Safety is my priority, and my hat is off to anybody who just strictly goes into these growth investments. For me, knowing myself well and having taken some risks before and made some money, I almost lost a lot of money in some of those instances because whether it was the ego getting to the best of me or just not being trained on that trigger finger of sell or this concept of chasing more. I like to play my odds at the table right. Being a safe investor is going to allow me to invest into high quality companies, invest over time, allow for the compounding to take effect, and enjoy and not worry so much about what the market's looking like. Do I need to sell? What's going on with these companies, right? Their earnings. A dividend company is usually safer during the downturns of economic downswings than a high growth company. So that's something I also look at.
About that, so I understand you're a dividend investor. By the way, most of my viewers are also dividend investors, and I do share the opinion that dividend investing is one of the best choices you can do. I'm more of a growth investor myself, and I disclose that in my channel, but I do understand the purpose behind dividend investing. There is one thing that I believe might slow down dividend investors compared to other kinds of investors. There are people that want to have the feeling that the income from the dividend is like a real income, like a salary, so they just get it and use it. There are some others that decide to reinvest it. So what is actually your approach and why did you choose to do that?
Yeah. I think there's across dividend investors, many of us will or argue about what to do with that dividend distribution. For me personally, and it depends on, if it's coming into a taxable account or if it's not, if it's in a tax sheltered account. So a lot of people, especially in the dividend investment world, will continue to keep DRIP. So the dividend reinvestment plan on. Now, that approach, that's fine. And I've certainly done that when I just began dividend investing. But really, what I do now is I actually toil with DRIP depending on where the value of a company is. So I don't necessarily want to reinvest my dividend into a company that is perhaps at a overvalued share price. Which means that I'm going to have to then be pretty active in kind of reviewing my portfolio and the positions in my portfolio, which, I guess this is a good time to mention then where I kind of stand with how many holdings can be in a portfolio. So thankfully, my foundation VTI, right? I don't need to really look at it at all. I just dollar cost average into it every single week, at least buy a share or two. And then, thereafter that, it's the individual position. So I will share openly and honestly that I think one of the biggest mistakes that I personally made as an investor, and this is really Monday morning quarterbacking, so it's hard to say it was a mistake because today, it's one of my greatest learning lessons and something I can share with others. But I will say mistake in just sharing for everybody else to avoid doing this. So I got really excited when I started to build up individual stock positions, and it was very exciting. Now, also, I was doing a lot of, I want to say, scaling in 2020 because just about everything was discounted. Didn't matter what company it was, from, Apple, Microsoft, and Google to Darden restaurants, all the banks like ExxonMobil, everything was just falling. And it was like, for me, and I think especially having watched a lot of YouTubers enticed me or made me excited to follow suit. So Andre Jick, awesome YouTuber, love him. Great, content guy, dividend investor. But he was someone that I looked to and was like, well, he's loading up on all of these positions. His portfolio is like 50, 60, 70 holdings. I should make my portfolio like that. And that's exactly what I did. Literally, maybe a year later, I got very focused on reading into Bill Ackman's life and his investment strategy and how he invests. He does have a Warren Buffett approach, but what's different about Ackman is that, right, he doesn't have the Berkshire, Pershing Square. He focuses on 7. At that point in time, it was 10 to 12.
Probably also opposite to Peter Lynch, because Peter Lynch 100%. Was the opposite. They used to make fun of him because he would buy everything. They would, these people, they would just calculate and say, look at this, and we'll say, buy it, just buy it.
Yeah, Lynch was add everything. If it's a little bit of quality, add it, right? Because it's like, now you don't know. On the other end, it's Ackman who's saying, and I love this quote when I heard it, and I abide by it to this day. At any given point in time, there's really only a handful of companies that are of the highest of quality. And so why would you build a portfolio of dozens upon dozens of positions. And when I heard that, it was actually in an interview that I heard him say that. It made a lot of sense to me. And I actually took the afternoon to literally, I was living in Manhattan at this time. I went out to buy a Dunkin' Donuts coffee and donut, and I sat in a park bench and I ate that donut and I asked myself, why do you have 40 to 50 positions just because these companies were trading at low valuations? And if I really, started to question myself, which I did, the question became, well, how much are you really earning from this company in dividends? Like 25 cents? Does that really do anything? And my strategy really just didn't make a lot of sense to me. That's when I made the decision to start to trim my portfolio down. Right now, it's actually at 19 holdings, and I'm still working to get that down to 10 to 12, with 2 of those being VTI and VTSAX. Just I never sold. I keep buying, VTI, and VTSAX is what I had. And then I want to just focus on 10 high quality companies that I personally love. I don't care what other YouTubers are doing, what other investors are doing. And I'm not swayed by, like a stock fell, I need to buy it now. The question for me is, am I excited about this company? And if this company were to reach out to me and say, would you like to become the CEO? Would I like to do it? And I think when I think about, that type of phone call coming in, I think you got to be kind of humble, because a lot of people I think would be like, oh yeah, I'd love to be CEO of anything. But we can't be fooled, right, by our own ignorance, because if you don't love what you do, you're going to end up destroying the thing that you're doing. And so I think that's really important for everybody. If you don't love what you invest into, you're probably not going to be inclined to keep up with what's going on with the company, to continue to invest into it. And that may set you up for failure later on. And you just want to caution yourself with asking yourself why. Start with why. Ask yourself why. Why are you about to do anything you're doing? Why are you investing in what you're doing? Why are you using the strategy that you're using? And I think that's where investors should start. Start with why, and don't do anything until you have a solid why. You can go to someone and they can't really nitpick your why. In my experience, you'll ultimately bring in more wealth over time, knowing your why and continuing to build upon that strong foundation.
I love the idea of the why. And I'm wondering, and probably also the audience would like to know, if you were to talk to your son and your son wants to become an investor, he wants to start, where can he get the information? Where should he move? What should he study? Should he just take action or read books? What would be the perfect approach for a new investor?
Yeah, that's a great question. I have my own investment strategy and I have my own stocks that I love for my own reasons. And you may listen to things that I say, get a nibble of it and love it and then run with it. But is it really yours? That should always be the question, right? And I have the opportunity to do a lot of speaking engagements, something that I know across speaker bureaus, or when I hear other people after conventions, whatever it may be, they will run with what the speaker says and then use it as if they said it. And the problem with that is, well, it didn't really come from here, right? It didn't really come from their own heart, their own thoughts. And so they're never really going to be able to deliver that on a golden platter for other people. And so where am I going with this? When it comes to investing, the best thing anybody can do, in my opinion, is remain curious. And it means going out into this world and to this playground of the world and exploring. If you love Apple, and you may not even know that you love Apple right now in this moment, but if your computer is Apple, if your phone is Apple, if you just bought the latest AR, the headset, the earphone, everything Apple, chances are you love Apple. The question comes into why? Why do you love Apple? What is it about Apple? And start to explore that question of why. Get to the root of everything that you're doing. And so I think you have to get down to your why with everything that you're doing. And so that requires me to be on my A game and reading about investments and reading about how to manage my life more effectively, because you will get a call, or maybe it's from a friend or a family member or a viewer on YouTube. I'm sure you've gotten emails by now from viewers, right? Thank you for sharing that video. You've helped me so much. So I need to be on my A game, right? And that requires me to be very curious about the world that I live in. And if other people are equally as curious, and we're all focused on what brings out that curiosity in us, and we all gain a sense of conviction for ourselves in what we're doing, we will have passion in everything that we're doing. So I hope that answers your question, but
That does
that's
answer
where I
my
would
question.
point a son, a daughter, or a friend, or whoever it is, a viewer, right? Like, don't aimlessly walk this world. Walk it with purpose and with curiosity. Ask questions. Don't be afraid to fail and fall and look stupid. And the more you're curious, the more that conviction will grow, because in that curiosity phase, what's really happening is the development of why.
Wonderful. Not only you said that people should be curious about investing, but also you are a curious person. So I would be curious to ask you, let's say that today you're going to have to decide which 10, 12 companies you're going to have. When analyzing these companies, which key metrics, which financial ratios, or which content, or maybe it's just going to be the management, the performance of the company. What is it that you look for while choosing these companies? Above all, considering that you're not a Peter Lynch with 200 companies in his portfolio, but your goal is to have like 10 or 12 positions. So it's even more important for you, I'd say.
Sure. So in terms of metrics on the quant side, certainly you can look at the PE ratio. I like to look at the history of the company over the last 10 years, right? I want to see a growth trajectory, but sometimes finding, especially in the dividend world, finding an undervalued dividend stock isn't always going to be the case because there's such safe, investment opportunities. I want to look at, to the best that I can, the future trajectory of the company, right? So where they, and then I guess it's a little bit then more qualitative work again, right? But what's the management team like? What are their plans? What are they trying to bring to the market? Are they continuously innovating, or are they working on their novelty, right? And now being the head of marketing, I'm very keen on that. Is my company actually innovating, or are we just selling things in a different way and kind of putting cherries on top of a cake? And that always makes a difference. So I think looking at stock opportunities like that, okay, what are these companies really doing? A Procter and Gamble isn't really coming out with crazy innovation every year, right? But a Lockheed Martin is. However, I use Procter and Gamble products every single day of my life, and I need them to smell good and to kind of present myself to the world. And then when it comes to Lockheed Martin, they're a defense contractor, arguably the largest in the world, safest contracts with good old Uncle Sam, the US government. They just this past week, $100 million plus deal with the US Army, right? That was 6 days ago. And then what's going on in the world? So there's a lot of qualitative aspects to it. And then kind of like Buffett, right? It's not all quant, because I think, and again, in order to have that gut feel in a company, it can't just be quant, but the time to buy is when it's undervalued. So then that goes into the PE ratio. It's going into taking a look at that balance sheet. The balance sheet is very, very important to me. At one time, it wasn't. Today, it is. When I just got started investing, I felt like the balance sheet, it's a company, it's $1 billion company, must be great. Right. Very quickly, I learned that's not the way to go.
Yes,
right?
What about the liabilities then?
Yeah. So, and something that helped me there was this notion of I started to look at how I manage my own life, and I am the CEO of my own life. Just like you are the CEO of your own life, and every viewer out there is the CEO of his or her own life. What does that mean to be the CEO of your own life? Well, if you're racking up debt on a credit card, or if you're not financially literate, chances are your business isn't going to really work out. Chances are you're not going to have any investors in you because you can't run your own life. So I ran my life like that since as far back as I can remember. I started to ask myself this question: why aren't you investing in businesses that operate like you do with a clean balance sheet? And that changed the script for me. I don't mind maintaining a healthy debt. And if that's real estate, if that's getting yourself an education, if it's doubling down on perhaps buying a camera or something for YouTube, but that balance sheet for a company is crucial. So some people, again, more risk tolerance for some people, me not so much, but I'm going to invest in the companies that operate like I do. Clean balance sheet, innovative, looking forward, trying to help the world advance. I think what might be wise for everybody to do, certainly something that I do, is generate a watch list. This is not a buy list. This is a watch list. And the reason that I want to create that watch list first is because it may not be the best time to buy right now, but if I have it on my watch list and I start to learn about it and I start to gather, kind of get all of my ducks in a row, gather my facts about the company. When the right time is to buy the company, I will buy and execute that trade, right? So if you take like Warren Buffett, he is a very, very methodical individual. If you've watched any of the documentaries that are out there, I remember I just have one that came to mind right now it starts with like Warren Buffett as a young kid flipping coins, and there's coins falling into what I think is a bucket. Then the voiceover comes, and basically it's Buffett's voiceover saying, I was never in it for the money. I just like math. And I thought that it was very interesting because I am actually not in investments for the money, right? Which is kind of interesting. I'm in investments in the stock market for what it has the ability to do at the end of the day. And I'm not looking to become, as oddly as this may sound, a millionaire by tomorrow. I have a long stories and track record with whether it was working in sales, making a ton of money in commissions, having a lot of fun, the Jordan Belfort lifestyle, if you will, in my early 20s. And what I reached even as a young kid, at 13, again working all those neighborhood jobs, what I did was I bought myself a bunk bed set. I'm sorry. I got rid of my bunk bed set and bought myself a brand new bedroom set. And I wanted it to be like a presidential suite. And I bought the bed, I bought the desk, the dresser, the nightstand. And I'm sharing this story because I think it's important for an investor to, realize why you're doing what you're doing. After I bought that set and it got delivered and the delivery men put it together, I actually that night wanted to kill myself because it didn't work, right? Like I thought the thing that was going to deliver me happiness was going to all of a sudden like open doors and it's going to be this euphoria. And what happened was nothing. So I can't sit here truthfully and say like, yeah, I want to be a millionaire by tomorrow. I can sit here and say, I want to impact 1 million lives by tomorrow. So that really becomes the goal then as I look at stocks. What am I trying to do when I invest into a company? And it set me up for the long term, but more so for my kids and for generations to come after me. And so investing now with that mentality sets you up very differently. I am looking for companies that I stand by, that I have high conviction with because I have interest in them, that I'd like to run them if I was given the opportunity, more so for growing the watch list. What companies am I using every single day? Procter and Gamble. I mean, how many of us wake up on the day-to-day and go about our day not knowing what products we're actually using from what companies? Wouldn't you rather invest into the company that makes your deodorant or shampoo? And so therefore, when that company pays you a dividend or you have part ownership of that company, you're not just investing and spending money on XYZ products. You're basically investing in your own business. That's how I see it. So I buy Apple products. Sure, I never buy the newest iPhone, right? For me, I buy the last generation before because let's be honest, they're all the same. And then I actually, every time I bought a new iPhone, what I actually do is I save up money to buy the Apple stock the same day I buy the iPhone. I would much rather buy the company every time than buy the product. What are the companies that are changing the world that I stand behind, that I use? That's how I generate my watch list.
That's great. You did touch two really, really important points, among others, and I want to get back to them because they're also really interesting for the audience. First of all, as far as I understand from what you told me about how you choose companies, you talked about Procter and Gamble, you talked about products that you as a consumer use every day. And I think I kind of feel some Peter Lynch behind this because I think that's something that also I learned from him. I wanted to confirm with you if this is also something you do. You see the company first as a consumer and then as an investor, because if you are interested in the company as a consumer, there is an advantage on the other side as an investor.
Yeah, I mean, look, if you anything that we do in life, there's a reason to why I'm doing it. I think there is a bit of how you consume should be how you invest. And of course, I'm not, when it comes to Lockheed Martin, I'm not buying the next F-35, right? But I know that the U.S. naval fleet is out there loading up on F-35s to protect the U.S. and allied forces. And whether you agree or not agree, you're going to defend, and Lockheed is there to defend, help defend. And so that's what I'm looking at, like the lenses in which I'm looking at these investments, how I'm consuming, or on the flip side of that, would I like to be the CEO? because this company is revolutionizing the world, making the world a better place.
Great. You talk about now the defense, the United States. So is there maybe going to be some particular specific global trend that we may try to foresee, maybe take advantage of? How do you think in the next, let's say, in the next 20 to 40 years, how do you see the US or the rest of the world is going to develop? Is there something that people should be aware of right now?
Sure. That's a long timeline there. So I don't want to set myself up for failure in 20 years, to look back at this video and say, wow, I really got that wrong. So I'm going to play
but
it
it's
smart.
Also interesting to get back to the video 20 years later and see if you were right.
See what happened. Yeah. I'm going to play it smart and just first preface with this. I love macroeconomics. I'm all about the macros and trying to understand the trends, to use macros to my advantage, to know where to invest and when to invest, right? And knowing that, if a certain macro trend, we could take right now what's happening, right? There's global wars. Then a lot of these companies, the Lockheeds, Raytheons, they are going to be a direct beneficiary of, unfortunately, war. And wars unfortunately happen. That's just, that's a product of life. Humans unfortunately can't get along with humans all the time. To the best that I can, right, in putting trends together, I think we're living in a time right now where, and you've read a lot of Dalio, so I know you're well versed in changes. I think what's interesting is tech, because as old as technology may feel, it's still very new. And 20 years, right? If we go back to the early 2000s, when Apple was really just coming out on stage with new tech and Microsoft was really trying to compete with Apple, we had Motorola phones, right? Like, I think we are in such, still at this point in time, a new era of tech, because technology has advanced pretty quickly and it's still advancing very quickly. We are still exploring in this exploratory phase of technology. And I think what that means is more and more of our R&D, if you will, in every field will be put into technologies, advancing technologies. In 2020, think about the coronavirus. Doesn't matter where it came from. It doesn't matter who you supported. None of that matters. What matters is you had a global virus killing thousands and thousands of people a day. And the question was, what do we do? And certain countries were really effective in containment and then rolling out the vaccination, right, policies that they set into place. On the other end, in the States, I can't say we were much better. And I will say then in Israel was actually right up at the top in containment and rolling out vaccinations. And they were able to get their people back on the streets much quicker. But as all of this is happening, what happened was the larger political question, I think, came in, which was, if this vaccine came about and it's safe, how were they able to produce it so quickly? And I would speak to my father about this, an executive who really did well for himself in the blood analyzer space. How is it that we were able to create this vaccine in a matter of months, right? How safe could it really be? And I said to myself, well, I mean, we have to think about how far we've come. If you don't believe that we actually came that far, then sure, it must be a hoax. But I'd like to put my eggs in the basket that every day that all of us wake up, there are people like me who are going to try their hardest to continue to advance society, global society. I was in the basket of, okay, this is not a hoax. We advanced and we're going to continue to advance. And I assure you that the next global crisis, when it comes to some virus, it may not be a couple of months worth of a process. Maybe it's a couple of weeks, and thank God. Right. Mm-hmm. Now, on the tech front of, say, I don't know, like Apple, we're getting new advancements out of Apple, Amazon, Google, Microsoft almost every week. And now it's really exciting. Why don't we question Apple and Microsoft and Google like we do some of these, healthcare players? I think that's important to think about. We're advancing so rapidly. And I think we're just at the beginning, right? You want to have your money, certainly, I think, in where we're heading. And I still think we're heading into this technological era. It's only going to get faster, better, smarter. AI is the new big thing right now, right? In the 1990s to early 2000s, computers were just getting into every single sector. And how much did the computer, literally opening up the computer to surf the web on dial-up, right? How much did that advance us? Now that we're, I don't know, 10 paces ahead of that, what is the next decade from now? What does a computer do for me? I don't know. It's going to probably do better than what it does today. And so that's kind of the thinking that I run with where we are.
So technology. But how does that play out with dividend investors? Because of course you receive dividends even with technology companies like Apple. But of course, technology companies, they are focused on growth. They're not so keen to give high and rich dividends to shareholders. How does that play out with dividend investor? And how would you then, as dividend investor, approach investing in tech from now on?
Yeah, sure. It's a great question. Hopefully, one of these tech companies doesn't develop a chip for my armpit so I don't sweat and I don't have to use Procter and Gamble products, right? I think that's how we have to start thinking. So, when it comes to being a dividend investor, I think it's the necessity and it's totally also dependent on where you are. Are you closer to retirement? Are you just shy of retirement? Are you in retirement? Or are you a younger buck, right, in the investment world? Now, I'm just about 30. So, if you're in your early 20s, you have much more time, that you can spend in the market. But even at 30, right, you also have time in the market. So when I look at where I am right now and my approach, I want to continue to be a safe investor. I think it's about marrying growth and value, but doing it intelligently. So I have those tech stocks, Amazon, Google, Tesla there in my portfolio. And the vast majority of my portfolio is in dividends. Now, interestingly, Lockheed Martin uses a whole lot of technology, right? Also paying a dividend. So I think you have the ability. Meta just announced their first dividend ever. I would have thought Google would have beat Meta to the dividend finish line, but whatever it may be here, we have Meta coming in strong with a dividend. I think it's important for every investor to, again, go back to their own strategy, understand who they are, how they should invest, what makes them feel comfortable, what is going to make them not pull their money out of the market should the market, experience some volatility. That's first and foremost. Now, if it happens to be dividend investing, I would say you're not on the wrong side of dividend history, right? If you go ahead and invest into a handful of growth opportunities, but make sure that those opportunities fit your investment criteria and your strategy. Google, for me, is not a risk, right? At all. To some dividend investors that they may, whoa, why would you invest in Google? Google to me is equally as powerful as any other dividend stock in terms of reliability. Now, as I think and I know, right? If you're a dividend investor, that company, I don't know, let's use these round numbers here. You put money into a company, it's worth $100. At the end of the year, they're going to give you the $2. And at the end of the year, you got your $2. The company's stock is $98. You still have $100. So I think it's important for us investors to realize that. But why is it that I feel inclined to put most of my money into the dividend stocks? Is because a lot of them have a solid track record of history. They've been growing their company enough so to pay out that dividend. And if need be, right now, I can reroute those funds elsewhere. And one day, when I want to begin to utilize, the power of really being a dividend investor with a passive income, I can have it at the ready. And that investment stream or that income stream will be set already because I built it.
True. What would be the right approach for a person to invest depending on their age? Do you believe that getting closer to retirement, they should look for more safety? And how would you suggest a person, depending on their age, to invest?
So age plays a major factor in investment decisions because the whole saying, risk big, win big, is great. But also with life experience, you learn that you need to learn how to play your hand and when to play your hand. Sometimes, if you have responsibilities in life, you may need to factor in the other people you're responsible for. If you have a wife and kids, if you have a couple, two houses, a beach house and your house, and then you have this investment opportunity because some, average Joe friend of yours comes up and goes, Bitcoin is down and now is the time to buy it. Do you have the time to make up that loss should that loss occur? Are other people's lives at stake stake? And I think that's an important question for all of us to ask. What are you willing to gamble? Now, that's where weighing the risk really comes in, because if you are trying your hardest to reach retirement and have a nest egg so you don't have to rely on anybody else or the government, well, play it smart, be wise. But if you have time and you got 20 years, 30 years to make up that loss, gamble on, my friend, you know? And I just think that you need to understand time, what's at stake, and if you're really willing to risk that.
So it all comes down to being able to assess the risk that is involved and being able to assess also how much time, how long do you actually still have.
Sure.
When it comes to risk, obviously there are different reasons why an investment might be risky. It might be risky because it's a particular sector that you believe that might not perform as well. It might be a particular company. It might also be because it's a particular country. So we go back to the fact of global trends, global changes, how the countries develop. So I'd like to know what your opinion when it comes to US economy and international economy. So there are always two parts. There are investors that really strongly believe in the US economy, which by the way, so far has been the one that did deliver the most. And some people instead say, no, let's invest more in international countries like developed countries or even emerging countries. How do you position yourself with your portfolio, first of all, and what you believe would be the right way to go in the future when it comes to
sure. I think, again, it comes down to risk, right? Now, I've invested into some Chinese companies. Right now, I do not own any Chinese companies, but I have invested into them. But I think if you're going to invest internationally, what's important to understand is their economies, their trade, how they interact with other economies. And you need to understand the big picture, because I think a lot of people, especially in the States, will probably see a Chinese company that is down and think it's the US equivalent of Amazon and just throw money into it because, oh, that's their equivalent. But then there's questions that you got to ask yourself. And again, we can go back to Corona, because Corona has impacted, a lot of economies. But if we're talking about Corona, right? Well, Alibaba, was a company in China that was falling constantly. I mean, every few months it was falling to new lows and then, coming right back up. As the world was opening up, what was happening in China was they had some of the strictest COVID policies that this world has ever seen. They would open up slowly and then one person would get COVID and they shut it back down. And so you saw stocks going up and down and up and down. And yes, there's money to be made there, but I wasn't investing into China for the long term. I was investing it again, in the interim on swing trades. And I did make money. And like I said, I got out and I backed away. And then it was funny because then Charlie Munger actually invested a whole heck of a lot into Alibaba and he lost, right? So, and I'm not saying I'm a better investor.
Even the greatest lose sometimes.
I'm nowhere near Munger's level of investment insight. And I think if a great like Charlie Munger can miscalculate, we first of all need to all sit down and say, well, I can miscalculate too, right? And that then comes down to doing your due diligence and your homework. Just like you do your due diligence and homework on a stock, if you're going to get invested internationally, do your due diligence. I mean, literally, I would recommend, if you can, if anybody read Phil Knight's Shoe Dog, fantastic book. Phil Knight went to China. He didn't just call anybody in China and say, hey, can you help me make these shoes? He literally physically went there. The benefit of being Phil Knight in his time before Nike was Nike was he actually had to do boots on the ground due diligence. And I think today where we're getting, caught in a trap is a retail investor no longer needs to do the boots on the ground due diligence. I don't need to go to China to see how China's doing, or do I? Right? Because if I went to China and if I saw how these companies were operating or the shutdowns that they were in, maybe I wouldn't invest.
Of course, it's also hard to speculate on the development of the United States themselves. So even in your own country, at least you have the possibility to see the country, how the country is developing. At the same time, it's always hard to assess what's going to happen in the next 10, 20, 30 years. But let's say for some people, some viewers of ours that are not able right now to move to Italy, to move to Germany, to move to China and really experience that, what would be your bet on the three biggest countries, 2 or 3 biggest countries that are going to play a role in the next decades?
This is a really fascinating question. I'm going to actually put India on a pedestal. I know you spoke about India before, but
I
India's
didn't know.
economy is really up and coming. Their population is booming, and this is going to ultimately mean there's going to have to be a workforce getting to work. The development of all of these countries, I mean, the benefit of investing into an underdeveloped country is that in due time they'll develop. And I think it's only a matter of time before India really begins to develop. We just had Starbucks not too long ago, 1,000 locations going into India. Fascinating. Now, China is obviously up there too as a world power. So I'd still have my money, or eyes rather, on China. For me personally, I am very interested in Israel's economy. The tech hub that Israel is like anything I've ever seen in my life here. You could pick up a rock and throw it and you'll hit a startup. And I think that's important because we have a lot of companies, the Googles, Microsofts, Apple, they're all in Israel with branch offices in Israel. I mean, a
Yeah,
lot
by
of
the way,
the
Tipranks is also from Israel, isn't it?
Tipranks, Israel, Seeking Alpha, Israel,
Speaking of,
investing.com, Israel. So you all of these investment companies, investment research companies are in Israel. I think though a lot of companies have branch offices here in Israel. I'm fascinated with the Israeli economy, the culture, because I think what is often overlooked about society here is because everybody at the age of inscription goes into the army. What that does is it expedites someone's maturity. And then it doesn't only expedite somebody's maturity, it allows in that maturing process that's expedited, you're now thinking differently in terms of what matters in life and how you want to make your kind of imprint in this world. And so I think then you have this tenacity after a lot of individuals leave the army to build something great to help change the world. Now, a lot of our technological advances in this world has had a flicker of light thanks to Israel. So if you're using an Apple phone, well, that chip inside that phone has Israeli ingenuity in it. And Apple certainly has a branch office in Israel. Microsoft, Oracle, all of these companies that we're using every single day, they have an office here in Israel. And a lot of the times, if you take our Google, Waze is probably the most well-known example, but Waze being acquired by Google is just one out of dozens and dozens of hundreds of companies that have been acquired by US companies or by larger companies, swallowing up these startups and getting to benefit from the ingenuity in Israel. The book The Startup Nation is one that I highly recommend for anybody and everybody interested in reading more about the startup culture in Israel.
Great, great. So guys, look at United States, look at China, look at India, look at Israel. I want to conclude this with a question that I'm going to have to say I'm stealing from your format, which, by the way, for whoever is listening, you should definitely check Ari's channel because it's wonderful, full of insightful information. And he interviews a lot of financial YouTubers, investing YouTubers. You really have to check it out. But I want to steal the last question from you because I really liked the questions you asked me in your interview. If you had $10,000 available right now, and I would force you to choose within the next 5 minutes a company that you'd like to invest it in, which company would it be and why?
This is a wonderful question, and I'll thank you for the $10,000. I think I gave it to you first. It's great to have it back. Now, I'll share. I'll share with you this. It may surprise a lot of people. It's going to go into a company that is not a dividend-paying company, but it is certainly a company that I very much am fond of and blown away by how under the radar it continues to fly. But we use it every day, and it's Google. It's a toss-up really between Apple and Google because I love Apple. I'm a huge Apple guy, but if we really think about what Google has the power to do with AI in the coming decade. And Cathie Wood said it the best, right? The company with the most data wins. And that's true. The individual with the most amount of insights is going to have a better chance at excelling than someone else who's just kind of guessing. That's where I see Google. Google has collected data and data and data and data over all these decades worth of time here. And they have compiled a wisdom database of all of our answers, everything we're searching for. And when it
Everything we're
comes to,
interested in.
Microsoft's AI and Google AI, yes, Google had a slip up, but I guarantee you that slip up will launch them, 10,000 paces forward farther than Microsoft. And again, it comes down to glamour, right? Microsoft may have not have dropped the ball, but Google dropping the ball, having learned the tweak or the lesson, will set them up. Now, Google's, when it comes to their balance sheet, squeaky clean. And they are the number one search engine, billions and billions of people searching on Google, making searches every day. The second most used platform when it comes to search is what we're using right now, YouTube, also owned by Google. And they don't have a lot of money they're not spending a lot of money, right, on a lot. And so that cash flow is coming in. And I like businesses that are set up like that, but also businesses that are driving change into the future and have the ability to continue to do it. Now, Google, I think, is set up well as a tech company now focused on AI. Who knows what it will be in a decade, but they'll be on the front end of it. So Google is my pick, and we'll see you in 10 years to figure out if it was well worth it.
Send me the invitation for the next 10 years. We're going to meet again, and we're going to see if Google is going to be the one. But great. Guys, if you heard Google, keep an eye on Google. It's going to be a great company. For now, I want to thank you, Ari. You've been a great guest. I really enjoyed this hour, and I really hope that also our audience enjoyed the conversation and they could take some really interesting insights from you. So I want to thank you again. I want to thank everybody for watching up until now. Of course, you can check out Ari's channel. I'm going to write it down in the description below. And well, thank you, Ari. I wish you a great day. Thank you, everybody. I wish you also a great day, and I'll see you in the next video. Ciao.